This is the anatomy of an 18-year legal battle over a destroyed warehouse. It is a case that ultimately hinged not on forensic evidence, but on a strict legal principle: who bears the burden of proof? The dispute played out before the National Consumer Disputes Redressal Commission. On one side, the insured, Spenta International Limited. On the other, the United India Insurance Company. Spenta carried a standard fire and special peril policy to cover their goods. On the intervening night of August 25th and 26th, 2008, a fire tore through their godown, destroying the inventory. But Spenta did not claim this was a simple accident. They officially alleged that two of their own employees, a supervisor and his assistant, stole 17 cartons of socks and then intentionally set the building on fire to erase the evidence. This specific allegation created an immediate friction point within the insurance contract. Under a standard policy, damage from an accidental fire is a covered peril. The insurer pays. However, damage stemming from employee theft is strictly excluded. By explicitly tying a covered peril, the fire, to an excluded peril, the theft, as one continuous criminal act, the insured built a trap for themselves. They severely complicated their own path to an insurance payout. To process the claim, both the insurer and the insured needed to know what actually happened that night. The authority stepped in to investigate. The physical evidence offered no easy answers. Looking at the forensic laboratory report from April 2009, the test for extraneous materials, like kerosene used as an accelerant, came back negative. 3 months later, the official fire brigade report reached a similarly frustrating conclusion. The supposed cause of the fire was still under investigation, and therefore unknown. Faced with inconclusive forensics, the insurance company found itself paralyzed. They issued queries and waited on the police investigation, but as the commission later noted, the insurer never issued a formal document accepting or repudiating the claim. Spenta waited. They answered the insurer's queries, and when the silence stretched into years without a settlement, they filed a massive consumer complaint, citing a deficiency in service, eventually demanding over 84 lakh rupees. An unknown official cause, combined with an insurer's silence, creates a dangerous legal vacuum. It forces the courts to define the responsibility for proving the facts. In civil litigation, the responsibility to prove a claim is known as the onus or burden of proof. This burden is not static. It can shift between the opposing parties based on which facts have been established. Spenta International relied heavily on this shifting burden. Their legal argument was that by simply proving a fire occurred and damaged their property, they had done enough to establish a prima facie case. To anchor this, they cited the Marari Woolen Mills case. They backed this up with Supreme Court precedent from the Swaran Singh case, establishing that if an insurer alleges a breach of policy conditions, the insurer is required to establish that breach by cogent evidence. The intended effect of citing these cases is clear. Once the insured proves the physical loss by fire, the onus shifts. It becomes the insurance company's burden to prove that the fire was caused deliberately by the insured or through some other excluded act. Spenta legal strategy effectively cornered the insurer. Their argument was, the official cause of the fire is unknown, and since the insurance company cannot definitively prove we burned the building down ourselves, they are legally required to indemnify the loss.
The insurance company's counterattack ignored the physical ashes of the warehouse entirely. Instead, they attacked the procedural conduct of the insured. During the final arguments in 2025, a critical piece of information finally surfaced. The parallel criminal trial, regarding the exact employees Spenta accused of arson, had already concluded. The judgment was dated December 20th, 2012. The insurer accused Spenta of actively withholding the results of this criminal trial from the consumer courts for 13 years. Furthermore, the defense pointed to a massive financial discrepancy. The original police first information report logged a loss of just 3.5 lakh rupees due to misappropriation, yet the civil claim presented to the commission ballooned to nearly 85 lakhs. By exposing a 13-year delay in producing a finalized criminal judgment, the insurer successfully changed the entire battlefield. They forced the commission to look past the forensic unknowns and ask, what exactly is the complainant hiding? The answer was buried in the text of the suppressed 2012 trial court document, Session Case Number 54 of 2010. The judgment thoroughly recorded Spenta's official narrative given to the police, that their supervisor loaded the stolen goods onto a tempo, and to conceal the theft, must have been set the godown ablazed. The trial court's final points and findings matrix reveals exactly why the document was withheld. On point 3, the court determined the accused employees did commit theft. But on point 1, whether the prosecution proved those employees set the fire, the finding was in the negative. This matrix was devastating to the civil claim. The criminal court definitively proved the theft, which the insurance policy excludes. Simultaneously, it legally disproved the insured's entire explanation for the fire. With the introduction of the 2012 judgment, Spenta's strategy collapsed. The burden of proof snapped forcefully back to the insured. The NCDRC observed that this was a peculiar case. By explicitly blaming specific individuals, the insured submitted their theory to a legal test that eventually failed. The insurance company cannot be forced to pay based on the stolen inventory, because employee theft is a standard exclusion. Nor can they be forced to pay based on the fire. Spenta provided a singular, stated cause for the blaze, which was proven false, and they provided no alternative evidence to suggest the fire was accidental. The legal doctrine here is strict. If an insured explicitly pleads a specific criminal chain of events as the cause of a fire, they forfeit the right to rely on a generic cause unknown defense once that specific chain is disproven. Underpinning all of this is the foundational concept of insurance law, uberrime fide, the doctrine of utmost good faith. Withholding a relevant criminal judgment from the consumer courts for 13 years is a direct violation of that duty. The Commission anchored their final decision on the criminal courts matrix. The formal acquittal on the arson charge served as the definitive evidentiary basis to dismiss the civil claim. After an exhausting 18 years of complex legal maneuvering, the multi-million rupee consumer claim was definitively and entirely dismissed. The procedural delay could not cure the substantive evidentiary failure. Hiding a parallel criminal judgment serves as a poison pill, voiding the claim regardless of the original burden of proof.
Zuber & Company, fire forensic experts and forensic engineers. Seeking answers from ashes. Seeking answers.